Welcome to AGR News. I'm Maureen Onti, and today we are talking about real estate. We have a special guest joining us, Brother Morara. Maybe you can introduce yourself. And welcome, by the way.
Yeah, thank you so much. And thank you for the good work you do for our community.
Thank you.
I mean, it's really, we're happy to have you to be able to, broadcast our voices, in our community, especially the Kisii community. But my name is Morara Ondari. Some people call me Tom, some people call me Thomas, but I'm Morara Ondari. I'm from Ogembo, Kisii, Kenya, and I've been in America for 24 years now.
Wow, it's 24 years?
Yeah, 24 years. I came here, in 2000, and I got a family here. Been married for 24 years. I came out here 2000. Then my wife followed me a year after with my daughter. We added 3 more kids.
Wow.
So now we're a family of 6.
Well, that's good.
Yeah.
So we were celebrating, the birthday for one.
yeah, we do. We do. We got different birthdays in every year.
Yeah, that was also an anniversary. So
yeah, we do that anniversary.
I was not invited, so I got to
we were in a hotel actually for 2 days.
Wow.
So we stayed in that luxury hotel right here in Arlington. We usually don't like traveling too far to get the same things we can get in our cities.
So, have you done, you've been a realtor the entire time?
No. Actually, I've been involved in different businesses before. I used to own a trucking company. Genesis.
I think that's before I came, maybe.
Yeah. Genesis, we started in 2006. Me and my wife, we worked together.
Wow.
For a long time, and the business was so good. We did a lot of good things for our communities, and I helped a lot of drivers achieve the dreams they wanted. And then,
Is it the one that used to be around 360 and 60 Random?
Yeah, 360 Random Mill.
Okay. I think I came there.
Yeah, absolutely. We built a big terminal over there. Yeah, honestly, we still own it today. Yeah, we built a big terminal, and then later on, things went the way they went. So we leased the property many years, and then we started doing something different.
Wow.
Yeah.
One person I haven't met so many people who left the trucking and went to do something else.
Yeah.
They say there's good money in trucking.
Yeah. It's actually good money in trucking. That's very, very true. But it's very, very a stressful environment. So sometimes you get it. When I was younger, I could do most of the I could deal with it. As I get older now, I'm like, my body can't handle it. So that's why, I kind of, that contributed to me getting out of it.
So what brought you to real estate?
I mean, honestly, in college, I went to school for accounting and finance.
What?
Yes, I went to school for accounting and finance. Those have been my strength.
Wow.
Pretty much for a very, very...
It's funny because I also did accounting from Kenya.
Oh, okay. Yeah, same thing from Kenya. I was in Moi Technical Institute.
Wow.
Yeah.
Wow, that's really
Moi Technical Institute. So accounting has always been at the back of my mind. It's something that I really want to do because I have a passion in accounting. I think that has to do with numbers.
Why real estate, not a bank?
Yeah, I mean, actually, I work for a bank now. I work for a bank, and the way we work, I'm a licensed loan officer.
Oh, okay.
But the law requires that I have to work under a bank.
Oh, okay.
I have to serve people through a bank. The bank now is my sponsor.
Okay.
Yeah, but my wife is a realtor. You know what I mean? So what I do, I approve people for loans, and then when I approve them, then my wife hold their hand and they find them their dream houses.
Wow.
Yeah.
The business is at home.
Yeah. It's really, me and my wife been working together since 2006.
Wow.
So it kind of worked pretty well because previously we have worked together, and now we're doing the same thing.
I think we need some script from you people.
Yeah. I mean, there's a lot of people who say that me and my wife can work together. But me, I'm an example that it can be done. You can work
people,
together.
They don't know what their husbands or wives do.
Yeah.
So, how do you make it a family business? You work together?
No, I mean, honestly, me and my wife really have an understanding that when we are doing business, we're going to talk about business. We're going to be mad at each other, disagree. This is business. When we go home, I am the husband, you the wife. So business, we leave it aside and now focus on family stuff. And it actually worked. I mean, it wasn't really easy in the beginning. But later on, we kind of got used to it. Yeah.
Was that a profession too, or she just moved because you were doing something finance?
Yeah. For me, it was a finance thing. You know what I mean? Like I had a background in finance, but for her, we have been investing. We have been investing as a family. Even when we were in trucking, we were investing in properties. So she became very, very good in real estate. And she was like, I got enough experience to help others.
I've interacted with quite a number of people, and financing is not an easy task for people.
Yeah.
So I don't know, what options do you have?
No, honestly, that's contrary to what I found out. Now I'm at the back. I'm the back office. I work for the bank. I'm the one who approves my clients. Seriously, and it's not really hard. It's very easy.
Wow.
Yeah, getting a home financing in America is actually easier than getting a car. Yes, it's easier because this is how the bank look at it. When you're buying a property, it's not actually you buying the property, it's the bank buying that property. Because they're the one financing it. So they have a very good collateral. So they don't have a problem giving you a house, because with a house, nothing's going to happen. If you don't pay, we come get the house. And then, we let you do whatever you've been doing. But when it comes to a car, there's a lot of risk involved in loaning somebody money for a car, because he's going to go dump it somewhere or destroy it or whatever. But there's very, very little risk involved when it comes to home financing. Very, very little.
So what, if I come I need financing right now, what do you consider? What are the options?
I mean, what we need, the bank, and the little people understand this. Banks are very, very regulated, especially after the 2008 economic depression, whereby, we had a lot of foreclosures in housing. So the government came up with strict laws and regulations to regulating the financial industry. And one of the things is if you come in and you wanting a house, you wanting a loan, the banks have to follow certain rules, and these are federal laws. So when you come in, there's no much really we look for except your ability to repay. Ability to repay is one of the key rules that were issued after 2008 crisis, and because a lot of people were being given money, and they didn't, the banks were not taking their time to verify if this individual is able to repay the loan.
So that's what basically we call pre-approval.
Yeah, that's what we call pre-approval now. Now we look at, but the major things that we look at is your 2-year employment history. So you must be making a certain amount of money for a certain period of time, and that's 2 years. So you can't be like, okay, the last 1 month I've been making 100,000. No, we want to see that 100,000 has lasted the last 2 years.
If I keep my own money under the mattress, and they come with money, you need to see it.
We gotta verify where you got that money from. So it's not like
so basically, no one will come with cash liquid cash and say, oh, I have cash, I want to pay.
Absolutely, you can, but we have to verify where you got the cash from.
Maybe I win a lottery or something.
Yeah. I mean, if you won lottery, then we should be able to verify that. But one of the requirements, as I said earlier, is said you just have to have 2 years of employment. And the other thing is the law also says that an individual's monthly financial obligations, meaning the anticipated mortgage payments, which is principal, interest, taxes, and insurance, plus your other monthly obligations that are showing on your credit report. For example, car payments, student loans. All your monthly obligations should not be more than 57% of your monthly income.
If I seriously need a house, I need a loan, and I do not qualify, what do I do?
I mean, when we talk about not qualifying, it really depends on what circumstances. Until I see your documents, there's a lot of people who come to me and they're like, "Oh, I won't qualify," but I'm qualifying more like 90% of people who think they cannot qualify.
Wow!
Because you would think like, "Oh, it's just about credit." Yeah, credit is really important, but the minimum credit required to qualify for a house is 500 points.
Wow, I have more than that.
That's the minimum, 500. So a lot of people think it's just a credit. No, actually it's not a credit. It's your ability to repay, meaning how much money can you show me that you're making every month.
So most people will qualify.
Most people do qualify, especially our people. We work hard. There's no African sitting out here doing nothing. We're doing something. So there's no way that you can say that you're not making money.
And talking about everybody qualifying, the moment I came here, most of us were living in apartments, and I stay at the farm of Arlington.
Yeah.
And right now, actually, my house payment, my mortgage payment, is cheaper than the rent for the apartment.
Absolutely.
So you talked about this. Supposed I think I saw you wrote about a house as an investment. Can you elaborate more about it?
I mean, look at it this way. Right now, if you are a family of, let's say, a majority of our people, we are a family of 4. Most African families strive to have 4 kids. 2 boys, 2 girls.
Minimum.
So, and we live in America, whereby every kid wants their own room. So you're talking about, 5 bedrooms, because mom, dad gonna have 1 bedroom.
And
each of the kids
to come also.
Yeah, each of the kids. That's at the minimum. At minimum, we're looking at a typical African family wants to live. They feel like they'll be comfortable if they live in a 5-bedroom.
Sure.
Dad 1 room and then the 4 kids each room. So now, what happens is, if that's the case, a 5-bedroom house right now, the average price is $350,000.
Yeah.
And the $350,000, when we want to calculate mortgage, monthly mortgage, meaning principal, interest, taxes, and insurance, you're looking at about $800 to $900 for every $100,000 you borrow. So you're looking at a $350,000 house, you're looking at about $3,000 monthly payments right now. But when interest were lower and they are expected to go lower, it can drop to about $2,500. So if you go out here and lease a house, or even an apartment in a nice place, because most of us Africans, we obviously care about school districts.
Yeah.
So even if you go in an apartment or
we're thinking about the zip code and
exactly. So now you're gonna be looking at about probably $3,000 to rent.
That's a lot.
Yeah, $3,000 to rent. So if you're looking at $3,000 to rent. And owning a house will cost you probably less, probably $2,900 a month. economically, it's more of an investment. If I were in that shoes, I would rather buy a house than to rent. And here's the other thing that I look at. For every rent that I pay every month, or one pays every month, a certain amount of money, and none of that money is gonna be gotten back because it's rent in full. It's just rent. But if you purchase the house and pay a mortgage of $3,000, a good amount of that money will go towards your principal reduction. So which becomes more of a saving. So every month that you pay a mortgage, some of that money is being saved for you. In addition to that, in DFW where we live right now, or probably even the whole of the United States, every year, house prices increase, or house value actually increases by minimum of 10%. So if you buy a $350,000 house for $300,000, next year it's going to be $330,000. How much money is that you have made? You have made $30,000 living there. You know what I mean? Doing nothing. And if I ask most business owners a question, most small businesses over here in DFW, how much money in profits they make a year, and the average would be $40,000. But you could be involved with so much things in dealing with the law, dealing with taxations, dealing with all running your business, but the profit is going to be about the same amount somebody who owns a $300,000 house is going to make. Just sitting out there passively making $30,000-$40,000 a year.
You know, I've never thought about it like that.
Yeah.
It's a very good. You are paying rent to somebody, the money is going, not reducing anything. It's just like you went and not like you went and ate at least. But the money is going to somebody else.
Yeah, absolutely.
This one, I see how.
Because those people, they come to us and we loan them money. And then you start paying mortgage for them. And then you are also building them wealth through equity, appreciation, yearly appreciation, you know what I mean? So instead of you building wealth for this individual, why don't you build it for yourself? Because those people, what they do is they come out here to us, we approve them for loans.
I also saw something for Texans like first home buyers. Do these buyers have a credit or a commission or?
I mean, we have programs. We have programs that helps first-time home buyers because the government makes money anytime people own houses. You know, most of our local governments are being financed by local taxes, and one of the biggest taxes is property taxes. So the government wants to increase home ownership. So they have various programs to help homeowners. I mean, new-time homeowners own houses. Because they know that at the end of the day, what's an average property tax nowadays? $7,000 a month, a year.
Yeah.
So you talk about $8,000 average property taxes. Right now, let's say, what if the government has 1,000 people owning houses in that city? That's more money for the government. So the government do have those programs actually for that purpose.
Wow. So, what advice will you give, like I'm a first-time homeowner, home buyer? What advice will you give me regarding these financial options? Because I may come to you, maybe I go to another bank. What do we really consider before we go to select the financial option?
I mean, if you look at it, most banks, we are about the same, to be honest with you, because banks, contrary to what a lot of people think, we buy loans on behalf of the government. The government is the one that waits for 30 years. The banks, we are brokers. We buy and then we sell to the government. The government gives us money, go get more loans for us. But we have government agencies like Freddie Mac and Fannie Mae. They buy all these loans. It's called secondary market. So we are in the primary market, and then secondary market is where buy loans get traded. You know what I mean? So if somebody wanted to get loans, it's very, very important to think about your approval. Mostly depends on your loan officer, because even finance itself is cultural. The way let's say somebody from a white race or a Spanish race, the way they do the way they arrange their finances is different from somebody from, let's say, Africa. You know what I mean? So, like for me, it becomes easy to interpret most of our people's finances because a loan officer, my job is to understand the people that I'm dealing with. I'm the one involved in the community. The bank is not. So when I come to you and be like, what do you do? Whatever you tell me, I would understand pretty quickly. But if you go, let's say, to
most people understand.
They won't understand because they're like, you know what I mean? No, you reject it. That's why when you apply for people like Bank of America or whatever, even when you know that you're doing the right thing, you still get a rejection letter.
And you even take a long time, 2-3 years, you are still chasing the same thing.
Exactly. But for me, there is no such a thing you've been rejected. I will tell you, man, go do this and this and come back after 1 week. Matter of fact, there's a guy who came to me 2 weeks ago and he told me I can't qualify. The guy has 2 master's degrees. His wife is a nurse. He's not being qualified. I'm like, why? Oh man, give me your stuff. I looked at them. I punched in the computer. The banks, we have systems that can tell us, what need to be done to do this and this. And I told him, hey, go do this and that. Yesterday, I just approved him for $400,000.
Wow.
To go buy a house. But he's been running around being told this, told that. But no, me, I understand. I understand what this means, what I'm gonna advise. I give people a plan. Like, okay, if the computer says now it's not working out, I'm gonna tell you what to do. But Bank of America won't do that. Wells Fargo won't do that. Or they send you a rejection letter saying, we've looked at your loan application and we are sorry you've been rejected.
That's it. I think there's a point you got there that I like so much, that in case there is something that is missing on my side, you are able to advise me what to do for me to comply. Oh, man.
Yeah, absolutely.
I'll tell you what to do. Our people are struggling, suffering.
No.
When you are here to help us.
we should, honestly. We should. And I feel really good when I turn something that has been rejected into like, no, you do have value. You are a hard worker.
Wow.
You're fine. I get you going. So I've never had cases where I tell somebody, you've been rejected now. You go get more lease on your apartment.
I feel like getting another house again. Do I have one? So where we come from mostly, what we do, we didn't want to invest back at home. But you're telling me that I can as well invest here. Most of us are thinking about, because I've interviewed a lot of people and I hear what they say, most of us are talking about the retirement plans. And my retirement plan maybe is to have a house in Nairobi, build it there, and go retire there. But as well, I heard you talk about the retirement plans in your post. So what you are talking about, if you can explain more.
Honestly, me, I look at things from the finance or economic practicality, like what is practical and what are the returns on my investments. And one of the things that I look at is like, I have spoken to a lot of people, and Kenya it could be a very, very good place. That's where we come from, or not only Kenya but Africa. But I feel like my investment is more of protected in America than it is in Africa. One of the things is property rights and the rights of individual to property is not really very, very guaranteed in Africa. I've had a lot of my friends who have gone to Africa and purchased properties or raw land and then build really mansions, down the road somebody come out of the woods and he claims ownership of the same
And you have a title deed.
I have a title deed. This guy also have a title deed. You know what I mean?
From the same government.
Yeah, the same government. You know what I mean?
Yeah.
You know, so like really, right now, when I look at my age, I'm like, do I want to gamble?
No.
Do I want to gamble? Like that? Yeah, because do I have another time to walk back and make that money again? I'm like, you know what? I don't want to gamble. And because America, once I buy property in America, chances of somebody coming around and claiming the same land is literally zero.
Yeah.
Zero in America.
Sure.
So in Kenya or in Africa, it could be, I would feel good that I own property over there, but I don't want to gamble. I don't want chances of like
to put all your hopes in there.
Yeah.
If anything happens, you will collapse and die.
Absolutely. And then this number two, my friend. Number two is if I invest 300,000 buy a house in America, I'm almost a guaranteed 40,000 returns every single year.
Wow.
Tell me what property that you can put 300,000 in Africa or in Kenya and get that kind of returns. Like literally, you're gonna build an apartment and you're gonna fill that apartment 25% because I got a lot of my friends who build apartments and they're already occupied 25%. The amount of money returns they get against the investment, and when I compare what I would get in America, I'm like, man, you know what? I want to invest here. You know what I mean? So for those two reasons, I choose to invest here. But I do invest in Kenya, but on a low scale. Like 10% of my money, I invest in Kenya, but 90% I put it here.
Thank you. Another thing I always see people struggle with coming up with or raising the down payment. Like I remember my time I was supposed to pay around 15.
Yeah.
Actually around 23, but I had 15 by then.
Yeah.
Thank goodness.
Yeah.
So do you have an advice?
Yeah, absolutely. Honestly, a down payment is you can get a house zero down because there is two types of expenses involved in buying a house. The first one is called down payment. Down payment, the government requires you to come with something, and it's really the minimum is 3.5%. So most of our people buy $350,000 house average. So for $350,000, you're looking at $12,000. The second expense is called closing costs. Closing cost is about 3%. Actually, it's probably 2.5 to 3% closing costs. So, and that is about probably 10,000. So if you add 12,000 plus 10,000, it would be about $23,000. But here is how I can get you a house without paying none of that. The 3.5% down payment, we can get government programs that can help you do that. But let me be honest with you, government does not give free money.
Oh, yeah.
The 3.5% they give you is a lien they're gonna put against your house. A lot of banks will not tell you that. They're like, oh, you don't have no down payment, no problem. Come over here, we'll give you the money. But when you try to sell that house, you will find out that hey, there's a lien for 3.5% the government put down for you.
Oh, okay.
You know what I mean? I like being very honest because for me, I work mostly my clients are our community. If I don't tell them the truth, the word will go around. Oh, this guy told us that he's gonna give us free money, but it wasn't free money. No, I tell them, yeah, I can get you a house without paying anything, but the 3.5% required down payment, you're gonna have to pay the government back when you try to sell the house.
Wow.
Here's number two. The closing costs, this is how we deal with it. My wife is a realtor. So I always, in most of our transactions, I tell her that, hey, I approved this individual for this amount of money, but I need you to negotiate with the seller to pay for closing costs. So then once the seller pays for closing costs, so of course you're not gonna pay the seller back. So what I tell my people honestly is at least pay for the down payment, because the down payment is your money that you're putting in there. It's your equity from day one. Like, you know, when you walk into that house, 3.5% is owned by you. If the bank, if you choose to walk away from that house, at least the bank will give you your 3.5% and walk away. But don't go for like, down payment assistance. You know, that's a catch. It's really a catch, because the money has to be paid later.
Yeah, because I hear there are some people still get a house, and after a few years, they do refinancing.
Yeah.
So what about refinancing?
Oh, refinancing is really a good thing, especially right now. The interest rates are pretty high. Right now, we are at about 7.1% national average. The rates are high. You know what I mean? So, but there's a good thing about the rates being high. When rates are high, house prices are low.
Oh.
You know what I mean? So the smart people buys when rates are high, and then the refinances when the rates go down.
Like now, if I refinance mine, I might be guaranteed at a lower rate.
When did you buy it?
Mine I bought it 2019.
Okay, you got it at the right price, the right time. 3.5%.
Yeah.
3.5. Yeah, you are the 3. Right now it's 7%.
Wow.
That's the national average.
So I hope
you cannot refinance any further.
Yeah.
The last 30 years, interest rates have been 5.5 to 6%.
Wow.
That's the average, the last 30 years. So we are not going to see the 3.5%. Maybe if there's another pandemic.
Well, maybe then I was lucky.
Yeah. So speaking about refinancing, what I can tell you is, buy now. If somebody don't have a house right now, buy now. Because when interest rates are high the way they are right now, the house prices are low. Buy now. When interest rates drop, you refinance. But those who wait for interest rates to drop, a house going for $350,000 right now will be going for $520,000. But you cannot refinance the price of a house. You can only refinance the rates.
Wow.
Yeah. So refinancing basically is good for somebody who purchased their house at a high interest rate. And now when the interest rate drops, they want to refinance for the present low rate. But if for somebody like you, forget it. You will never refinance your house again. You don't have that space to refinance.
I'll keep on getting another one.
yeah, you're getting another one. But I would never let it out. Even if you come to me today, because we do refinancing here. If you come to me today and be like, I want to refinance my house, I'll be like, man, are you crazy? You got 3.5%. You want to refinance for 7.
No. Yeah. So, thank you so much. So, are there any predictions? I think you have actually given predictions about the market trends.
I mean, what we're seeing right now is there's a lot of economic realities that are really shaping America right now, especially in real estate. There's a lot of corporate entities coming into the market, purchasing huge numbers of houses at whatever price that you tell them. So I see the future of housing becoming really harder for an ordinary person to buy a house in the future. I mean, whatever house you live in right now, hold on to it. Because in the future, it's going to become a nightmare for an ordinary person to buy a house. Because you're not only competing with regular, Joes, you'll be competing with corporations.
Yeah, corporations want to purchase and
they would buy any price. So right now, if I was somebody, unless government comes up with restrictions on those corporations, but right now they can do whatever they want to do.
Texas, we are free, so you can purchase as many as you want now.
They are. So that's really what is going on.
Wow. So your last word to our people, especially my people, remember, who want to invest in Kenya but have a mentality that, I don't want to struggle. Like when I was purchasing a house, before I did, a lot of my friends told me, it is good to stay in an apartment because if things maybe you break something, they make.
But it's very good that you came up with that. That's really genius question. To be honest with you, let the people understand this. A house is immobile. Don't try to compare a house with a car. Houses don't break down as regularly as cars breaks down. It doesn't really happen. It's very rare to find to. There's three things in a house. There is a HVAC, there is a foundation, and there is the roof. Once you get inspected before you buy them, and they're in good shape, they give you probably 15 years lifespan. You know what I mean? So you don't want to have any problem.
Wow.
But what I can tell our people right now, in America, the business that is really easy and most profitable for an ordinary person is buying a house.
Wow.
And like in Kenya, you are a teacher, you can have a kiosk here, you can be farming cows and whatever. There's no such a thing as side hustles in America, actually. Buying a house, most Americans, all they do is buy a house and buy a life insurance. That's about it. There's not really much. But if you look at buying a house for $300,000, start making $30,000 to $40,000 every year in profits, doing nothing.
Wow.
Like what other businesses are here? I'm gonna give you right now a gas station. There's a time I wanted to buy a gas station actually. And it was a Shell gas station. So I went over there to their meetings and they broke down the numbers. I found out that I was gonna make about $4,000 a month in profit.
4,000.
So, but now you can buy a house and make $50,000 a year. Make more money than somebody who's owning a small business, hustling, doing all these. And
vis-a-vis the risks that are involved in running that business, all the stress. Man. Talking about insurance, maybe before asking that, I know we are done, but you only finance for real estate or you can finance for another thing?
No. Our bank is a mortgage bank. So our loans are absolutely mortgages. Meaning like the collateral has to be a real property. It can be land, it can be a farm, it can be whatever it is, but it has to be guaranteed by.
Okay, so are you the one who requires me to have an insurance or is it the realtor?
We talk about homeowners insurance.
Yeah.
I mean, remember, me, I work for a bank. You know what I mean? I work for a bank as an independent contractor. But I'm technically an employee of a bank. So the bank, whenever they give you their money, they want to have some kind of collateral in case something happens.
Actually, so you even insure your money at times.
Yeah, absolutely. Because when you look at it, this house we pay for you $350,000. What if it burns tomorrow? How's the bank gonna get their money back?
Insurance.
So the bank makes sure that you have insurance to insure their investment.
Wow.
Yeah.
Wow.
Yeah.
So that's what to my viewers.
Buy houses because me, I'm a living testimony. Honestly, I purchased my first house 3 years in America. And a lot of people kept on saying, my friends, they were like, you know what, he's going to be kicked out. You know what I mean? Whatever. I paid off that house and I purchased a bigger house. I've been making really a good amount of money every year through appreciation.
Wow.
Yeah, and honestly, you can be a millionaire in America by doing nothing but just buying a house.
Wow.
Like really, you don't have to be owning a gas station or owning this business here. Just buy a house. Because if you buy right now, somebody who buys, let's say, somebody who bought a house in 2019 for $350, those houses are going for $550 right now. And somebody who bought a house 2015 for $800,000, same house right now is going for $1.8 million.
Wow.
So that person has been making about $100,000 a year in profits. You can't compare that with anything.
You know, when I do interviews, I ask people what are the challenges you face. Have you ever lost money? But answering that insurance, the question that answers my question that how will you lose your money?
You can lose money, you have insurance. You can lose money. And also the bank, before they give you the money, we appraise all these properties.
Okay.
You don't have to worry about, somebody, the house is overpriced. No.
Yeah.
Before the bank pays the money, they would appraise that house and be like, man, go ahead and get this one.
Yeah, if somebody's selling at 500 and you appraise it comes to 350,
it's gonna go for 350. The bank cannot pay a dime more than the appraisal. No.
How do people reach you?
Yeah, I'm on Facebook, Murara Loans. I go by loans, and I also go around pass flyers. You know what I mean? My phone number is out here. It's 214-724-2807. But if you Google Murara Loans, you will see me everywhere on all these. Google searches or Facebook,
all social media.
Yeah, absolutely.
I know this is our first interview, but I'll be coming for more because there is a lot of you're a bank of information.
Yeah, absolutely. I mean, if you tell me what do you want to know, me honestly, it's not about just working out here. I have experience. I have hands-on experience. Whatever I tell people is what I've done myself, or I see it working for me.
They say it's the best.
Yeah, absolutely. I mean, I got the educational background, but at the same time, too, I'm doing the same thing. I started investing in America 22 years ago.
Wow.
22 years ago. Yeah.
22 years ago.
Yeah. So
there is a lot you do. I also see the charity missions in Kenya. So I'm not going to talk about it because of time.
Yeah.
But are you hiring? That's what people ask.
I work for a bank here, and the bank is hiring. This bank is hiring like every single day. All somebody has to do is to go get a license, and then call me, and we can help our people with own homes. Own homes, and they invest. Because the Bible says that a wise man leaves his children an inheritance, but a fool leaves debt. You know what I mean? I'm telling you, if you buy a house, you will never leave your children a debt. You're going to leave them an inheritance.
And as well, we may not fault our parents for not having anything to leave unto us, but we will be faulted if we have nothing to leave to our children.
Absolutely. But if you look at our parents, they did really a lot for us, because how much they live depends on how much they are able to have.
Yeah.
You know what I mean? Like if I were really the son of a president and I was a son of a peasant, my expectations from my father, who is really poor, and the expectations from my father, who's a president of a country, would be totally different. But they equal to the same thing.
Yeah.
You know what I mean? So when I look at what the contributions that our African parents have made to us, it's about who we are now. Is the troughs of experiences and standing firm and training us in the farms and whatever that made us who we are now.
Wow.
So they made really big contributions.
Mr. Murara Loans, thank you so much.
Yeah, absolutely.
Well, there you have it, listeners and viewers. This is AGR News. It has been quite a number, let me say, a lot of information for us.
Yeah.
And we will be coming back for more questions. If you have a question, you have a comment down here. And for more information, his contact information is down here as well on the link. Therefore, don't hesitate to reach out because we came to this country. I remember the Israelites were told that you are thinking of going home. You want to stay here for more than 70 years. So build in that land, buy homes, stay there, and start new families. So this is our land. We want to be here. Do something. Till next time, I'm Morino.
Thank you.